Today, we are here with Anthony DeSano to talk about our insights on the market update and going into 2024. So, if you are looking to buy, sell, or invest in the coming year, you need to tune in to this episode. Anthony, how you doing today?
Very good, very good.
Excellent. You are no stranger to the Grow Your Legacy podcast. We love having you here.
Thank you. I'm glad to be here.
Thank you. So, what do you think? Tell me your big predictions for 2024 and this interest rate in the housing market and the bond market as a whole.
Yeah. What do I think? We're starting to see. I don't know if you've been paying attention, but we're starting to see a real relaxation in rates over the course of the last 3 weeks. It started with a jobs market that seemed to be, less jobs created than they had anticipated with the ADP numbers. And without getting into a lot of the mumbo jumbo about it, but a lot of things hinder on what Powell says about raising rates, and or maybe forecasting to lower rates. And of course, the other things are strictly based off the numbers. And what are the job report expectations on the first Friday of every month versus what the actual job report numbers that come in? So they have an expectation every month, and it doesn't meet that expectation. If it doesn't, if it's lower, you start to see rates drop. So there's a lot of factors that make rates up and go up and down. But one of the biggest things is that jobs report number on the first Friday of every month. So they'll say, hey, we have an expectation that 190,000 jobs are created. And then the numbers come in. If they're lower than that, that means that the economy is slowing. And so rates will come down. If it's booming, hey, jobs were created at 220,000. Well, that is higher than what they expected. And you see rates go up. That's one thing. The second thing is, when Powell speaks, people listen. He talks
We saw
about
that the other day, last week.
It's unbelievable. He's trying to get a handle on inflation and figure out what he should do to either keep it going in the right direction where it's at, or to pull back because we're where we need to be. And they're hawkish on it. Every time they speak, it's we're in a good place, but that doesn't mean we're going to definitely rates. So they're hawkish about really saying that hey, we're definitely going to be lowering rates in the coming year. But I think that just the fact that you're starting to see the market come down means that even the market can see that they should be lowering rates in the coming months. Now they're not going to tell you they're going to do it until they do it, but you can see the market. I'm looking at it right now, and wow, I mean, what a big change over the last 2 to 3 weeks. That
Yes.
we've seen this. And so what you're seeing is investors making their own decisions on what's really happening. Inflation is better. That means they can predict, even if Powell doesn't say he's definitely going to lower rates, that he most likely will. The odds are he will, and that's a good thing. Job reports. The funny thing about job reports is every single month, what's happening is we're getting a report positive. 2 months later, we get a revision, or maybe, not maybe 2 months, but maybe 6 weeks, we get a revision. And so you'll see something like, we're hoping to see 190,000 jobs created, and it comes in at 200,000, and that picks rates up a little bit. And then 6 weeks later, we factored in jobs that we shouldn't have factored in. So now they lower it, and they lower it to 170. So then they revise the numbers. And so what we're seeing is that sometimes that first report on the jobs report is not the actual facts, and these facts get revised later on. And that's another thing that you're seeing in the market right now is investors have seen enough of it. We've seen enough of telling us the jobs report was a positive jobs report, and then 6 weeks later telling us it's not a good jobs report. So I think you're starting to see that they've had it with what is, I don't want to say faulty reporting, but just misreporting. And so what does that mean as far as my prediction? Because that's really what you're getting at. My prediction is that
tell us. We want to hear all the details.
Hey, look, I'm not a guru, but I can see what's happening, and I predict you're going to continue to see rates go down. Now, how much is really,
that's what I want to know. How low? can
How
you go? How
low?
low is it gonna
How
go?
low can you go? Every borrower is different, as you know. Every situation is different, as you know. Obviously, you can get an idea of the general consensus, and that's easy to do. You can go on Forbes, which I'm clicking on right now, or you can go on Optimal Blue and see where the average rates are. And so,
About
you're
six
starting to
and a
see
half
conventional.
now?
Yeah, 6.5, 6.6 with conventional right now, 6.5 with FHA. That doesn't mean every single person that applies for FHA gets 6.5.
Right.
Someone might get 7. Some might get 6.25. And it all
Mhm.
depends on that, where are they credit score wise? What's their debt to income ratio? What's
Right.
their loan amount? Loan amount plays a part these days, which is another thing that didn't play a part years ago. Bigger the loan size, sometimes the better the rate. And that's just something different and funky that's going on in the industry that didn't go on before. So those factors will matter. So you can get some conventional people at 6.25%, maybe with
Mhm.
very little buy down to none. But some conventional people could be 7.25%, and that's kind of where we are
Easy.
now. So
Mhm.
on average, 6.6 conventional, 6.5 for FHA on average.
Right.
So where do I think we'll see this? I bet you in the summer, come June, start to see conventional, the average being 5.99, and FHA 5.5 to 5.75, and that's me being conservative.
Oh,
So
you froze. You said that's you being conservative?
yeah, that's me being
Okay.
conservative because I don't want to get people too excited.
Right.
Say,
Don't get them
hey,
too excited.
so I would not be surprised to see conventional loans in the summertime, somewhere in the summertime, hitting 5.99 or better, and FHA loans hitting 5.75 or better. Um, just based on where we're headed and what I think, they're going to have these meetings and they're going to say what they have to make a decision at these meetings, whether they're going to raise or lower the rate. My prediction is they will. Now, if they do it 2 times in a row, you might see even better predictions than what I just said.
And
You
that's what
might
I
see
want to
five.
say too, Anthony. You might not, and I agree with you on a lot of things now. We work together on a lot of loans.
I know.
Now, I'm happy. This is my first time hearing your prediction, by the way, right here on Grow Your Legacy podcast. This little snippet that y'all are seeing.
God, I hope
I
I'm right.
think, I think this is me, and I'm no lender. Based on everything that's happening right now, inflation is coming down. Even the prediction that Jamie Dimon with Chase saying that the S&P 500 is going to decline, or of course, a prediction may decline up to 10% is what I heard.
Mm.
I'm looking, that's big, that's huge. So I'm like, and you see, inflation is coming down, and to save, like you were saying, the economy and everything that's going on that end, the rate has a lot to do with that. I mean, it has a
Yeah.
lot of, I'll say this, there are a lot of factors. He can't just go in the Fed chair. He can't just
Yeah.
go in and say, "Oh, I want to make this to make everybody happy." It has a lot of factors, just like you said.
Mm.
Based
Mm.
on that and some other things, I think it could go down as low as the fours. But
This summer,
but
bold prediction.
just predicting. Now I don't know about the summer. I mean 20 at some point in
Some point in
2024
2024. Okay,
as a
yeah,
whole.
I was giving you a quick 6 months. But
Right.
yeah, towards the end of the year and going into 2025, I wouldn't disagree with you. If
Okay.
we start
Yeah.
to see inflation, they lower the rate, inflation stayed the same. They lower the rate, inflation stayed the same. They'll continue to do that.
Right.
And that's something that, now you're talking another 2 more cuts potentially, because if they don't see inflation tick up after they're doing these cuts, they will continue to do the cuts. So if they continue to do that another 2 times into 2024, now you're talking seeing rates possibly in the 4 range.
But here's the thing. And I know, just like you said, I don't want to get everyone excited. Here's the issue I have with that. You can get excited all you want. That's not a good thing for the lower income and lower middle class buyers at this point. Because as you know, well, I'm pretty sure you know, all right, 80% of the investors that own these rentals, to my knowledge, in here in the US, 80% is mom and pops investors. They own less than
Mm.
9 homes or
Right,
less.
right.
So these people have money, and more of them are coming to that point. The boomers, they have this money and they want to play ball. So when
Yeah.
these numbers keep coming down, these rates, they're going to jump back in the game as well. So
Yeah.
they're going to be able to buy cash. And that's going to, you already know the all of this,
Yeah.
I'm sorry, not investment, but the pricing. That's going to drive the competition. It's going to be a lot because as of September, according to Redfin, 25% of home purchases were done in cash, and that was on the rise. So that's
Yeah.
telling me, okay, they're going to really be in the market, and that's going to take a lot of the lower income, lower middle class out. And these upper middle class people who are investors who do have rentals, about 10 rentals, 9, 10 rentals, they may want more because of the rate. So it's
Mm.
not always a good thing because you're seeing a low rate. And I say all that to say this here. Buying now, I know everybody always, oh, realtors always say buy now, buy now. If you're going to buy, I think you should buy now. Do you agree, Anthony?
Of course, because look, housing prices, they're not predicting that they're going to come down. I
No,
know people
right.
want them to. I know people want them to come down because they're, in some parts of the country, it's pretty crazy. But the prediction is not that they're coming down. So you're not buying a depreciating asset. And in fact, if the longer you wait, that $420,000 home that you might be having your eye on, and it's going to be $440,000 in 6 months
Mm-hmm.
or a year or whatever, however long it is that you wait. So interest rates. The thing I always say about interest rates are they're changeable.
Mm-hmm.
Once you purchase a house for a certain dollar amount, you can't go back in time and do that. The great thing about interest rates is you can go back. You can change it. You're going to get into a 6% interest rate, and that's not what you probably would want. But when interest rates, like you said, possibly hit the fours at the end of the year, you paid 6% on what, 10, 12 months? And now you refinance your home, and now you're paying in the 4% range or the 5% range. And then when it goes even lower, you're going to take advantage of it again. I took advantage of lowering rates twice in my time when I purchased my house in 2009. I went from 5.125% to 4.125%, then 4.125% to 2.99%. So
Okay.
I took advantage of it twice. Now,
Mm-hmm.
a lot of people just get nervous about the rate, not realizing about refinancing and how powerful and important refinancing is. When I did my refinancing, I took years off my home. I have a certain payment on my mortgage that I had at 5.15%. When I refinanced, I owed 28 years on my home. I ended up refinancing it to a 25-year loan at the same payment I was making for the 30-year loan. So basically what I
Wow.
did was wipe out. So I didn't change my payment at all. My payment didn't go down. What I did was take 3 years off the life of my loan.
That's awesome.
Did the same thing again. In 2020, I owed 18 years left on my mortgage. I refinanced into a 15-year loan. Payment stayed the same. So I used the lower
Excellent.
rate. I was fine with my payment. So I didn't really need a lower payment. What I wanted to do was see if I could pay my house off faster. Some
Mm-hmm.
people are going to want the payment lower. So what they'll
Right.
do is, if they owe 20 years on their home, they're not going to try and do a 15-year loan to lower their term. They're going to refinance to a 20-year loan to lower the payment. And that's
Right.
fine because that might be something that they need immediately, that relief. Otherwise, if you really can take, can handle the payment that you're making, you do the refinance and then you take years off of the loan by lowering your term. And that's what I did. So I took 6 years off the life of my loan by working the refinance market. Now, if I did nothing and I just sat with my 5.125% from 2009, I have 6 more years before I can pay off my mortgage.
Wow.
And so it's taking advantage when you can. So that's the whole buy now thing, is because the price of the home that you're looking at is going to be higher later. The interest rate, you can get that changed.
But
And one
also
thing
too,
we know is
Anthony,
rates always change.
they do. But I love how you mentioned the rate. Okay, let's say you want the home for 400,000 now, right? And you're saying, no, I'm going to wait until rates drop. That same home, let's say it appreciates in value rapidly and it's 440,000, like you just said. Even if the rate is lower, in a lot of cases, the payment can still be the same as if what you did when you got
Or
it at
higher.
four. Right,
Or higher. It's
right,
$40,000 more you're borrowing. And yes, the is much better, but
right.
you just tacked on $40,000 as opposed to having bought it at 400,000 a year later, a year earlier,
Mhm.
suck it up with the rate that for 1 year, and then refinance that $400,000 loan at 4.25. So now, now you got a $400,000 loan at 4.25 instead of a $440,000 loan at 4.25. So those are the whole buy now thing. You can look at rates if you want, but the most important thing is how much a house is jumping up and where will the house that you're looking at be when you wait that 1 year.
Right. That
So
purchase price is pretty that's fixed for the most part. So you have this rate that, like you said, is changeable. So when
very
it's less
changeable.
competition, and I know people are talking about let's talk about the hedge funds. They're not as powerful, or they don't own as much as the mom and pop investors. And I have you heard about the bill that's trying to limit them? Have you heard about that?
No, I haven't actually.
Okay, I won't get into details, but yeah, we don't have to worry about that. But just talking about the competition that you're going to risk getting doing what you're doing, if you can
Mm,
get approved now, you need to give us a call. Give me a call. I'll patch it through to Anthony and we can get this done because it's less competition. Yes, the rate may be a little higher, but it's lower than what it was. That's the
yeah,
key. It's lower than what it was.
it's
And when
better
the
than it's been in a long time.
in a long time. Since
Now's the time to
August. This
strike.
is what
Yeah.
it's the first time it's been under 7 since August.
Yes, and I've actually
So,
called quite a few people that me and you have talked to that were waiting, and I said,
uh-huh.
"Hey, guess what?" And I'm ready to tell you that they're ready because they're going to start texting me back.
Okay. Yeah, look, I'm always ready. Anthony, I'm always ready to go. I appreciate you doing that too, but
No,
people need to get off the sidelines, make a move because you're thinking, I understand why people think that. If you don't know, you don't know. And that's the purpose of watching little snippets like this so that you can know and get in the game before everybody and literally their mama and daddy investors buy up
yep.
everything with cash because you cannot compete. I'll say this, in most cases, you cannot compete with a cash offer.
Oh, of course not.
You
Of course
can't
not.
because it's going to
Quicker,
close.
easier. Yeah.
Easy, quicker. We're talking, Anthony, what's the fastest we close a cash closing?
Oh, you mean a loan?
No, a cash deal.
A cash deal can take
I can't
well,
remember.
gee, it can take a week and a half. It can be
Right.
that fast.
And it's
You
done.
know,
That's it.
yeah. You're
I don't have
just
to wait
dealing
on
with
a
an
packet.
attorney. Yeah, no, you're just dealing with an attorney that has to draw up the paperwork and get to the closing table. You're
That's
not
it.
dealing with a loan office, and in most parts, you're not even dealing with a lender's appraisal. So
Right.
the appraisal is
So
optional, basically.
optional. So
Yeah,
you can't really if I'm selling a house and I'm trying to hurry up and take advantage of this low rate while it's here, if I'm trying to scale up in my home or scale down, I'm not trying to wait for your loan up to 45 days when I can have cash in 2 weeks and I can go on about my business if
of
I'm
course not.
selling. So that's just something to keep in mind. But Anthony, thank you so much for coming on. I think
No,
this was
no
great.
problem.
Hopefully everybody got some insight. Be on the lookout, follow, subscribe, because we're going to do these very often and give y'all some more information and insight.